the numbers have only gotten worse and industrial profits have fallen 27.1%. Now, those are big numbers. And I have to admit, I was not expecting such a large drop, but China's industrial profits fell off of a cliff last month. Now, China is introducing stimulus into their economy right now in order to prop it up, and reports like this about the industrial profits only highlight the dire need for stimulus. Now, in this video, we're going to discuss this latest information out of China. What does it mean, this industrial profit and the big decrease in the numbers? We're going to talk about what it means for the economy and also what it means for you and me. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. China's industrial profits took a big hit in August. It was 17.8%. Now, in September, the numbers have only gotten worse and industrial profits have fallen 27.1%. Now, those are big numbers, and industrial profits are important. They're a key indicator on how factories and industry is doing as a whole. Now, for China, deflationary pressure is hurting producer prices, to say the least. Gate prices are continuing to fall. I think we're like more than a year in a row of consecutive months of gate prices falling in China. Consumer demand continues to be the big issue there. And especially when you have a soft consumer demand and then an abundance of products and goods just like keep on coming out that are just readily available there, mix that with the soft consumer demand, yeah, you're gonna get this deflationary pressure that we are seeing, and it is starting to show up even more in the numbers than previous. Now, these are the highest that the numbers have been since COVID. They are, and the fact that they are increasing so much, going from what it was the first 9 months of the year, first 9 months of last year's 3%, something around that range, to 17% to 27%. We are starting to see bigger and bigger numbers pop up, which is just, more red lights, more flashing lights, an indicator that something is wrong here. Now, in our last video where we discussed China, we talked about China's third quarter GDP, which did grow at 4.6%. Now, again, depending on where you get your information, that 4.6% number can be taken one of two different ways. There are people that say that China's target is 5%. So anything that's 5% or less, if it's not more than 5%, it is below target. It is a bad number. Then you have other people that come out and say, well, the United States, which people are saying that it's doing pretty good, is growing at about 3%. And a lot of other major economies out there are growing even slower than that. So that 4.6% looks good. Again, depending on which way you look at it, China's GDP is, can be interpreted many different ways. Now, China's top legislative body will be meeting in Beijing at the beginning of November, and analysts, investors, they are, just kind of keeping an eye out right now for the idea of additional stimulus coming out, and particularly stimulus that's going to focus on that consumer demand side. If it's stimulus directly to the consumer or in some other way, however they want to go about doing it, but trying to increase the consumer, the demand side of things, because again, the economy is growing. There are other parts of the economy that are doing pretty solid, but with deflationary pressures that are there, it's just, that is a good place if you're gonna focus on additional stimulus. I personally believe, and a lot of analysts and economists have come out and said it as well, trying to increase that consumer demand would be a good thing. Now, they have recently, spent some money, done some things on shoring up the real estate market, that struggling real estate market, propping some money into there in order, trying to make it easier to finish some unfinished products. The stock market got quite a bit of a boost, and it did good things for the stock market, but trying to help that consumer demand side. I think that you're gonna get more bang for your buck there if you could start to get consumers that are, spending more. Again, however you go about doing it, but I think that's where a lot of the key lies in that specific area. Now, China will be releasing their October manufacturing numbers later on this week, and I'll make sure to cover it on the channel. But those October manufacturing numbers, they will be an even clearer, a more up-to-date view on exactly where the economy is. And I'm sure as we go into that November meeting, those numbers, they will even hold more weight than the stuff that we are already seeing. But nonetheless, the broader economy is still growing at about 4.6%. They can still hit their target of 5% with additional stimulus in the fourth quarter, but with industrial profits continuing to plunge, it is definitely something to be concerned about. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.